Hank, ACC in New Zealand, we're pretty lucky to have it.
Yes, we are indeed. It's a very good system that generally works well most of the time. Unfortunately, it's a little complex in some areas, and for that reason, a lot of people perceive it as being inadequate or not working properly. But a lot of that is just really a misunderstanding of how the system works. It works really well for most people who are on waged or salary PAYE type earnings. It gets a little complex when you have your own business or you're self-employed, and works quite differently in those particular circumstances. There are options, but generally it does work particularly well.
Barbara, when you go out and see some clients, obviously one of the areas that you talk to them about is the PAYE people.
Yes, no, that's right. So we're always looking at everybody's full risks. ACC is part of that if they're self-employed and a business owner, and it's really important that that's taken into the analysis because it's a complete picture that we do.
Hank, big difference between the person who takes drawings off a business and somebody that Barbara Lee's talking about who gets paid?
Yeah, it's really simple if you're on wages. Your ACC income compensation entitlement is 80% of your income. Really simple if you're on wages or a salary, you just get 80% of your income. It's taxed before you get it. So realistically, what you get in your pocket is 80% of what you were going to get if you were still working. The problem comes in when we take drawings. Drawings aren't registered as an income. We take drawings out of the cash flow of our business, and then at the end of the year we give our accounts to our accountant. He analyses all of that and then comes back to us and says, you need to pay tax on this particular amount. That information is submitted to the IRD. The IRD then submit that information to ACC, and self-employed and small business owners then get levied based on that taxable income. So what happens then is there's an anomaly in what we're actually bringing in, or what our perceived income is, as opposed to what we pay tax on. So when it comes to income compensation around ACC, that's compensation if we can't work because of an accident, we have a particular problem because often our drawings are equal or greater than what our taxable income is. So our entitlement is then the same as a PAYE earner at 80% of our taxed income.
Barbara, that's going to open up a can of worms, isn't it?
Absolutely, yes.
Because literally you're doing yourself in the eye by not paying yourself a whole lot of money.
It's a double-edged sword, isn't it? You know, like accountant's role is to dial down a person's taxable income, but then that has an effect if you do have to claim for an accident. So part of our role is to make sure that people are protected, firstly, you know, for an illness and injury contract. That's where we, our first port of call is.